Hi there, folks. James Marley here, co-founder at Livewire. I'm joined by Will Mumford, Deputy Portfolio Manager at Auscap Asset Management, for a quick rapid fire about some of the opportunities you're seeing on the ASX. Will, let's kick it off. Bullish, bearish, neutral when you look across the ASX for opportunities right now?
I think I'd say neutral overall. I mean, the market's overall PE multiple is clearly historically high. That's up in lights, you can't ignore that. But there's also a lot of variability within the market. And so I think there are opportunities. And in some of the sectors that are cheap at the moment aren't necessarily the lower quality sectors, which creates opportunities.
All right, let's stay with that.
Yep.
12-month forward view. Which sector looks rich with opportunities?
Well, I mean, we tend to look more at the stock level, but one of the areas where we're seeing a lot of opportunities right now is healthcare. On the ASX, there's a lot of stocks that are trading at a discount to their historical valuations. They're dominant in their sector. They've got a long track record of earnings growth, which should continue. So we think it looks pretty attractive.
All right, can you give me a name?
Sure. I mean, my go-to is probably ResMed.
Yep.
So that's a stock that is really dominant within its sector. It's serving a large, underserved, underdiagnosed market. It had a long history of double-digit earnings per share growth. It's founder-led, and it's got potential upside from wearables and GLP-1s as well.
Will, you're a numbers guy.
Yep.
What's the metric or number that you go to first when you look to analyse a company?
There are lots, but one I'd call out is probably just the 10-year compound earnings per share growth of a company. I think it's just a good shorthand way of thinking about whether a company actually can grow earnings and has a structural competitive advantage. It's also a good nonsense detector. If you come across a business that's meant to be a good business, but it hasn't grown earnings for 10 years, well, you need a really good reason to think that's going to turn around. And I mean, of course, you've got to add in the quality and whether those earnings growth can continue as well. But it's a good shorthand.
Okay, you've gone quant. Let's go
Yep.
qual. Management team that stands out as executing really well right now?
Oh, I'd have to go Eagers Automotive. I mean, every time we catch up with management, they've got some new initiative which has the potential to be a game changer for their profits. And it doesn't always work. A few years ago, they were talking about consolidating all of their dealerships onto one site at the Brisbane airport, and it didn't work out. But then a couple of years ago, they talked about doing a joint venture with this new company called BYD that no one had heard of. And today, BYD is going to generate them $2 billion of revenue this year.
That's incredible. 7 years at Auscap. I was hoping you could give us a tip.
Yeah.
Something for our readers.
Yep.
Something you've learned about managing a portfolio that could help them.
I think it's just the focus on quality. I mean, my initial instinct when I came into the market was to look for low PEs, look for mean reversion. As Buffett says, that the great business on the reasonable multiple often has a much better margin of safety than the average business on what's on a lower PE multiple. I think you want to stack your portfolio full of Roger Federers and Cristiano Ronaldos rather than long shots.
Okay, awesome. Thanks for jumping in for a rapid fire with us today, Will. Great to catch up.
Great, thanks, Jimmy.